Hello, I'm Pat O'Hare, Chief Market Analyst for Briefing.com. Today is Tuesday, December 23rd. A lack of leadership prompted participants to send the stock market lower in another thinly traded session. Trading volume remained light ahead of the December 25th Christmas holiday. Less than 1 billion shares were exchanged on the NYSE this session. That is the least volume in a full trading day since August. Stocks actually opened with broad-based gains, advancing as much as 1%. Those gains quickly turned into losses, though, as sellers entered the ring, focusing much of their effort on the financial sector. Financials were up as much as 1.2%, but finished the session 2% lower as the worst-performing economic sector. The sector's weakness was largely attributable to diversified financial players, which will still be facing formidable obstacles in 2009. Bank of America and J.P. Morgan Chase traded as laggards and also weighed on the Dow. Goldman Sachs and Morgan Stanley also finished lower. Analysts at J.P. Morgan lowered their earnings estimates for Goldman, but raised their estimates for Morgan Stanley. Concerns continue to surround automakers. Standard & Poor's lowered the unsecured debt rating of General Motors to C from double C, even though the government plans to provide GM with financing. Meanwhile, Moody's lowered Ford's credit rating to CAA3. Economic data did little to incite buyers into the market. The latest batch of home sales remained weak. November new home sales declined 2.9% to an annualized rate of 407,000 units, which is the lowest level in 17 years. The consensus forecast called for new home sales of 415,000 units. November existing home sales declined 8.6% to an annualized rate of 4.49 million units, which was worse than the already depressed level seen in recent months. The consensus called for 4.93 million sales on an annualized basis. Final third quarter GDP data came without major surprise. The economy contracted at an annualized rate of 0.5%, which is unchanged from the prior reading. European exchanges closed with mixed results. Britain's FTSE finished 0.2% higher as its investors overcame news that the economy officially slipped 0.6% during the third quarter. British banks were key in the advance. Banks and financial companies in Germany helped limit weakness in the DAX, which fell 0.2%. France's CAC 40 lagged, closing 0.7% lower. The MSCI Asia Pacific Index closed 2.8% lower in the wake of yesterday's loss warning from Toyota Motor. The fact China cut its benchmark rate by a less than expected 27 basis points to 5.31% also weighed on sentiment. The Hang Seng shed 2.8% as developers and banks showed weakness. Japan's markets were closed for holiday observance. I'm Pat O'Hare for Briefing.com. Thanks for listening.